Whether you're an experienced trader or an investor or you're a novice, it's essential that you understand the concept of trend lines and trading ranges more importantly. These two elements will affect the stock market every single day, so you having a good understanding of them is key if you want to be a successful trader or even investor. So what we're going to do today is take a look at what trend lines are, what trading ranges are, and how they can help you make better decisions when it comes to your investing. In the stock market, a trend is just a general direction that a price will move in over time. This can be classified into usually three categories, which would be an upward trend, a downward trend, or a sideways trend. And a trend occurs when prices increase steadily over time or decrease steadily over time, or as you guessed it, sit sideways over time for whatever period it might be. Now, knowing these trends will definitely help you to identify which stocks are more likely to outperform in any market environment. Because as you must remember, guys, the trend is always going to be your friend. Now, what are trading ranges? A trading range is just simply the difference between the highest price of an asset and the lowest price of that asset during a particular period of time. And this represents just how volatile that stock or asset has been during the time frame. The higher the trading range, the more volatility. And if you guys usually watch any of my normal trading videos, you will know that the true range value is one of my favorite indicators to use because it's just very nice to show you how volatile a stock is. Trends and ranges are two fundamental concepts that everybody has to understand. And I want to take a look now at the actual charts to explain the three different ones. Now, the first one is just going to be a sideways trend. This is a trend that most of you have probably seen. This occurs where there is sideways consolidation for whatever time period you're looking. Now, in this example, we are going to use Amazon. Now, this chart is a weekly chart, so each one of these candles represents 1 week, and this is from July 27th, 2020 to May 20th, 2022. Within that 2-year span, you can see that we ended up trading within this trading range. So one of our trend lines or our resistance area would be right up here at the price of $175. This is because we rejected 1, 2, 3, 4, 5, 6, 7, broke through. So that level of 175 is going to be a very good and very strong resistance. In this situation, our support would obviously be $150. This is because this is an area in which the stock had bounced at plenty of times. As you can see, 1, 2, 3, 4, 5, 6, 7, where we have this major resistance to where we have this major support. This level is going to be our trend range. So we have a range of 175 to 150, which is a $25 spread. Now, I'm going to do in another video how you can actually understand which way these trends are going to break out of this sideways, but that will be for another video. If you want to see that, hit the like button, comment, and obviously subscribe so you can stay up to date. So let's talk about the downtrend. This is probably something that you will see most nowadays with how the market's been in the past year and probably the coming year. This is a easy downward trend that we're looking at on Tesla, and all that happens is the stock is moving its way down, making lower highs each and every single time and lower lows along with it. Now, one of the best ways to trade this is obviously to go short every single time the stock reaches that resistance level and playing it every single time with normally a tight stop loss set right above the resistance. And you can see that at this time where Tesla's trading right now, where we broke through that resistance line is the time that you would go long and most certainly cut your short position since we have broken well above that trading range. The uptrend being our last trend is probably the one that most people want to see, and it is one of the easiest trends to trade. The uptrend is obviously higher highs moving their way up higher and higher, followed by higher lows moving their way up. Now, classically, you would enter every single time price action or the stock moves back down to that trading range, setting a stop loss slightly underneath just in case we break, and taking profits on the higher high. Of course, it won't work every time. There will be points where you get stopped out if the stock drops through that range and it gets bought back up, but obviously that's just going to be part of the game. Now, there's one last thing before we wrap this up. I want to talk about volume. I want to go over specifically what you need to be looking for to see if we're going to bounce off of these trend lines, specifically when it comes to volume. So we have our volume profile up right now, and if you guys don't know what that is, I highly recommend you go to the Discord and take our free trading course. It's a technical analysis course that I created that teaches you guys everything I know, and it's completely for free. As well, while you're over there, join the Discord. There's over 10,000 members. You guys get tons of free perks. So of course, using a volume profile is one of my favorite things, and you can obviously tell that if we're going to pull back to a support, this can be somewhere around a large area of volume that we're going to catch that support. But something I want to talk about is just classic regular old volume. I know it's something that everybody just overlooks a lot of the time, but volume as we come down to a major support level is very important. We want to see big volume down on a support to see if we can bounce. A good example would be right here, which is March 25th, 2021. As we came down to that support level, you can see by taking a look at the volume directly below it that volume was increasing as we were approaching that support level, therefore giving us a solid way to bounce. As you can see here, inversely, before that, we did have a lot of volume, but it was a ton of selling pressure. Now, something that might show that we may end up breaking that subsequent trend line, which would have probably been up here, is low volume. If we come down to a support level with very low levels of volume coming in, that is not a good sign that we will hold the major trend, and it could be a potential sign that we're going to break through and start to trend in the opposite direction. I hope this video helped, guys. Please let me know if you have any more questions. We're going to continue to do more of a formal style of content on this channel, teaching more of the fundamentals of trading, since I know it's something that a lot of people are really interested when it comes to my trading style. As always, guys, go ahead and check out our Discord community. It's completely free. You get access to free courses, free live streams, free seminars, free webinars. As well, you can get access to all of my trades over there for only $1 a day. Go ahead and check it out, guys. Thanks for all the support, and I'll see you tomorrow.